Hello everyone, welcome to today's backtest video, and today's backtest video is going to be on gold, and this is January 2026. So as you can see, price runs down to take out sell side below this low right here, to take out sell side liquidity. And some of you may be wondering why price didn't run down this low as well. Okay, maybe you're wondering, okay, these are relative equal lows, why didn't price run down these lows? So this swing move right here is actually an order block, and price respected it at this point, okay, while taking out this low. So going to the 15-minute time frame, you see clearly that it's actually an order block. So this is the same swing movement. You can see this down close candle, then followed by this up close candle right here. So this is an order block, and price is respecting this order block. That's the reason for price not dropping down below this low, okay, at this particular point in time. Though it later did drop down below this low, okay, to take out sell stops. Okay, you can see the strong down movement in price, okay, taking out this low. But at this point, at the New York AM session, it was actually respecting this order block. Okay, so it's only round down this low right here. So back to the 5-minute time frame. Like I was saying, you can see price running down the sell side, running down this low to take out sell stops, and running up to take out buy side liquidity at these highs. Like trades like this are high probability. Just looking at the number of buy of highs, okay, of relative equal highs, you see right here. This high, 1, 2, 3, and 4. Okay, and at the left of all these eyes, there's a huge order block right here. Let me zoom in. You can see this up close candle accompanied by this down close candle. So this is an order block. This is another block, and you can see price respecting it as well. Okay, couldn't trade above the high, also went up, couldn't trade above, couldn't trade above the other block. Okay, tested on it twice and returned bearish. So you see this price movement right here. Let's get into it. So this low was actually taken out exactly at what time? 8:30 New York AM session. So at 8:30 New York AM session, the low was taken out, and I actually went long on this trade, okay, on this particular swing right here. I'll show you the trade order on my MT5 at the end of the video. So why price took out this low right here, I was already looking for price rally up to take out these highs. Okay, so why price traveled up to this particular point, I thought to myself, oh, maybe I missed the move, but I wasn't going to change to chase price anyway. Okay, so I would have let that one go, because there would always be another opportunity in the market. There's always opportunities in the market every week, every single week. So during this rally up, price created a small fair value gap. You can't use any annotate it, so you can see it for yourself. The price created a fair value gap. Okay, and my buy limit was actually at the top of this fair value gap, while price was making this run up right here. While price was making this run up, my buy limit was actually at the top of this 5-minute fair value gap. So I was like, I missed the move already. and I was not going to chase price. I closed the buy limit. Then I noticed this run down in price, and this was happening at the silver bullet time window. So the silver bullet time window is 10 a.m. to 11, 10 a.m. to 11 a.m. So during the silver bullet time window, let me take this off. Price was dropping down, and if you notice, price didn't take out these highs right here. So the buy side liquidity was still intact at this moment in time. Okay, so when I saw this rundown in price, I knew it's probably going for the 5 minute fair value gap to 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 trade into it to run up for the buy side. So I set back my buy limit order to go long at this particular point, and you can see price trading into the 5 minute fair value gap with just few ticks into it, then run up. Still at this time window, price run up to take out buy side liquidity. Now, how is that random? Here's another proof to tell you that there's an algorithm actually pushing the market. The movement in price is actually algorithmic. Okay, and here's proof. I've shown so many examples of this ICT silver bullet time window, and price most likely uses this time window to run up to liquidity to take out buy side or sell side liquidity. So for those who have watched my previous videos, take note of the ICT silver bullet. Like, it's not random, it's actually algorithmic. A sudden run up in price to buy side or sell side liquidity at this particular time window. Not shown to you in one video, not two videos, in more than four videos now. And I'll keep showing this in more of my videos coming up. Doesn't that tell you that price is not influenced by buying or selling pressure? There's actually an algorithm in price. Now let's save that talk for later and go straight to business before I end the video. Now you see, after price took out buy side liquidity, price ran down once more, traded up to, okay, I said earlier this is an order block. Okay, this is an order block. So price ran up to test the order block once more, and finally there's a displacement in price at the buy side. After taking out buy side liquidity, there's a displacement in price, and you can see the 5 minute fair value gap so clear. Price trading into it at what time? At 1:15, 1:25, and this, okay, 1:20, 1:25. This is the New York PM session. So the New York PM session starts from 1. So at the New York PM session, there's a drop down in price after price has taken out these buy side liquidity, buy stops from these highs, from these relative equal highs. There's a drop down in price. Then price trading into the 5 minute fair value gap. Then round down, take out this low right here, creating another fair value gap. So I actually didn't trade this. I was okay with my profit for the New York AM session. But I guess the main move was done during the New York PM session. which I wasn't around to watch. You see, after price traded into the fair value gap below the second fair value gap, so it dropped down in price, creating what multiple fair value gaps. This and this, and also this is also an order block. You see these up close candles, these two consecutive up close candles, followed by these two consecutive down close candles. This is another block, and inside the other block are fair value gaps. You can see one at the top and one at the bottom. Now price took out. Let me bring this up. Price took out this buy side liquidity right here and run down to take out what? To take out sell side liquidity. Where's the sell side? There is the low. Price run down to take out this sell side. See clearly at 2 p.m. Price already took out the sell side liquidity. So I hope you found this insightful, and if this brought any value to you, drop a like, subscribe. Also, that reminds me, I said I'll be showing you my order on my MT5. So this is my MT5, and this was the trade. So as you can see, this was the low price took out during the New York end session, rallied up, created a fair value gap, small 5 minute fair value gap, which I placed a buy limit order above. So while price ran down, it triggered my buy limit order, okay? And my stop loss was here initially, but I moved the stop loss. Sorry, my take profits was at this level initially, but I moved it upward. And while I saw a strong movement in price and playing above this buy side, I actually brought out my stop loss and placed my stop loss on top this level right here. Okay, thinking there will be a continuation in price, and price took me out in profits. So I will encourage you to do your own back tests as well. Until next time, have a fruitful week.